I'm Charlotte McLeod with investingnews.com, and here today with me is Brien Lundin, editor of Gold Newsletter and host of the New Orleans Investment Conference. Thank you so much for joining me online. Great to have you here.
Always a pleasure, Charlotte.
Really good to be speaking with you. And as I mentioned, you are, of course, the host of the New Orleans Investment Conference, which is coming up from November 1st to the 4th. Where we're going to begin today is getting an idea of what's going to be happening at that event. So I've attended multiple times in the past. I'll be there this year. It's always one that I look forward to. And I was hoping you could tell us about the themes that you're planning to cover there this year, and maybe talk about some highlights in terms of the speakers and panels that you think people should look out for.
Yeah, absolutely. You know, of course, that the New Orleans Conference is the oldest investment conference going today. This is our 49th annual event, and we're known over the decades for bringing some of the top thinkers and thought leaders out there and analysts to the event. We always have a blockbuster speaker roster, and this year, I think, quite frankly, it's our best ever. We don't have some of the political big names, celebrity names, because I've chosen in these really crucial times to focus more on the really valuable, insightful thinkers out there. We're going through extraordinary times, and there have been some extraordinary people that have risen to explain these times that we're in. And we have just about every one of the top ones out there coming to New Orleans today. From a political standpoint, I have Matt Taibbi, who I think is the most important journalist of our generation, who's exposing all of the government censorship efforts. In a similar vein, we have Konstantin Kizin, who has an incredible following around the world. I urge people to Google his name. He is the new up-and-coming analyst and commentator on the political scene out there. And so we do that a lot at our event. We cover geopolitics, which are very important right now as we're seeing around the world. But we also cover economics, macroeconomics, and how they drive every asset class. In that vein, we have James Rickards, Danielle DiMartino-Booth, George Gammon, Rick Rule, Dominic Frisby, Brent Johnson. We have Lynn Alden this year in person. She rarely appears in person at these events, so you'll be able to ask her your questions at this year's New Orleans conference. We have Dave Collum, Peter Bookvard, James Stack, Peter Schiff, Jim Iurio, Tabby Costa, and the list goes on and on and on. Probably all of your favorite newsletter writers will be there, covering the resource markets and their top mining stock picks. And on that note, I think this is a crucial point in the markets, in the mining and metals markets. I think it's a generational opportunity. I have not seen an opportunity like this since 1999 and 2000. In fact, I think it's even better than what we saw back then, because the metals prices are already fairly high, and gold's near an all-time high. Yet the mining stocks don't reflect that. So the turnaround, when it comes, and I think it's coming pretty soon, is going to be quite dramatic. And this is the turning point, and the timing is perfect for New Orleans this year.
Okay, thanks for going over that. As I said, I'm really looking forward to it. And I love how you bring in familiar names, but also every year there's new people there that you might not have heard of, but you'll leave and you'll think, wow, that's somebody that I need to follow. So let's talk a little bit more about the environment we're in for gold as we're heading toward this event. So you're mentioning this is going into kind of a generational opportunity, and that's something that we've talked before. I looked back to our conversation last year, and we were talking again about sentiment leading up to the event. And one of the comments you made was it was looking about as washed out as it's ever looked. And so how are we looking this year, 1 year on, where we're still kind of, people are not really feeling so hot about gold?
Well, I don't know if we're still washed out or that we're washed out again. We've had some rallies in the meantime, and of course they were cut short. But we're back there. We're back at what appears to be rock bottom. I'll go back to People, what I mentioned before, people ask me if I've ever seen a market like this. And I say, yeah, the 2000 and 1999, when gold was selling for $252 an ounce, the mining stocks were naturally wiped out at that point in time. And it took a couple of years of an uptrend in the metals before the junior mining market really started to wake up. These days, with gold within 10% of an all-time high, we're only going to need really a couple of weeks of a significant uptrend, one that's based on some kind of a fundamental factor, primarily monetary policy. But if that happens, a couple of weeks of rising metals prices, and this entire junior mining sector will be just on fire. And the key for investors is to pick up these values while you can, because that's coming for some reason at some point in time that we can't really pinpoint with any accuracy, but we know it's coming, and it's most likely not very long from now.
Okay, and let's talk a little bit about current events that are happening right now. So, over the past week or so, we've seen war break out, and that does seem to have lent some support to the gold price. But I know typically when we see these geopolitical events like that, what I often hear is that it can lend that support for a short period of time, and often that tends to then peter out as it continues. So I want to get your opinion on what we have going on now and whether it will play out in that way or perhaps in a different way.
Yeah, you hear that often from me. I know that because I've talked about that for many years. I don't recommend that anyone buys gold when we have these little flare-ups around the world, even these big flare-ups around the world, because people buy gold in those instances because they think it's going to go up and they'll be able to unload those holdings onto somebody else at a higher price. So it's not really a fundamental driver. The real reason to buy gold is when you think that your currency is going to lose its purchasing power at an accelerated pace in the near future. That's the primary driver that creates longstanding and powerful, consistent bull markets in gold. And that doesn't happen from a geopolitical flare-up. In this instance, though, it may prove to be an exception because geopolitical conflicts and uncertainty and volatility could lead to a change in Fed policy. And as we know, Fed policy drives all the markets these days. So it could have a more lasting fundamental effect if it forces the Fed to either pause or pivot. And, I mentioned that we don't know exactly what or when the Fed will be forced to pivot, what will cause that. But we know there's lots of options out there, and this may be the one that no one was really expecting. That's usually the way it happens. Usually the precipitating event is something we haven't really been talking about that much and comes out of left field. So this violence in the Mideast and Israel would fit that description perfectly, and it could be what actually causes the dominoes to start to fall and persuades the Fed that it has to lay off the markets right now and lay off the interest rate hikes.
Can you go into a little bit more detail on why in this particular geopolitical event might prompt the Fed to make that decision?
Yeah, well, it has the risk of spreading. It has been planned, and not to get too much into geopolitical analysis, if it was not to have longer-term cascading consequences, there seems to have been little rationale for it. So it seems like it's creating an uncertainty, instability, and perhaps an opening for other groups to pile on, both in the region and elsewhere, and against the U.S. and other world powers. So it could escalate very easily, and I think that's the big fear. In that sort of an event, then you can bet the Fed will not be raising rates going into something like that, because you're talking about the fiscal situation getting even more dire. You're talking about even more government spending and uncertainty in the markets. Ironically, the markets will respond very well. The U.S. equity market, for example, even as this conflict came in or was developing, was actually rising because of that very rationale that perhaps this will convince the Fed to take its boot off the necks of the markets and the economy. So everything is looking and waiting for what is the inevitable turning of the cycle, which is the ending of this tightening cycle, and then going into a more accommodative monetary cycle, which is, of course, due to a crisis that would be of the Fed's making.
Can you talk a little bit more about the other factors that the Fed is considering as it looks to make that next interest rate decision? I know we got the latest CPI data quite recently, so any other things that it might be having in mind?
Yeah, the Fed is looking at the economic data and seeing that the U.S. economy is much more resilient than perhaps anyone expected, but it's been very resilient. The jobs market is still very strong and buoyant, and the Fed feels like it has to kill that off. It's really sworn allegiance to the Phillips curve idea that you have to kill off the jobs market to really depress inflationary pressures. So they want at least a mild recession. They want to really get an unemployment rate higher. And the data is not really supporting that just yet. If you dig a little bit deeper into, say, the September jobs number, which came in double expectations, you can see that a lot of that was due to either government jobs or second jobs. A lot of people have two jobs or are forced to have two jobs to pay their bills. And if you're forced to have two jobs and all of a sudden you have jobs reports that come in double estimates, which is kind of what happened. So the Fed is really just going full bore ahead and seemingly determined to keep rates higher for longer. And that reality finally sinking into the markets led to the weakness that we just saw recently, especially in gold. But there are a lot of things that could change and will eventually change the Fed's mind and force them to pivot. A lot of options for what that precipitating factor could be. You have the banking crisis could reignite at any point because the banks are in a lot of pain with these at these interest rate levels and have a lot of losses on their books that are not being reflected, have not been forced to mark to market. You have the recession that every indicator has been pointing toward. That could develop at any point in time. We've seen corporate bankruptcies in the U.S. spike to the highest levels in over 13 years. Who knows what it could be? A lot of dominoes that could fall. When you go from the loosest monetary policy in human history directly to one of the harshest tightening cycles ever seen, you're going to break a few things. And we haven't seen anything break yet, but we've seen a lot of weakness and a lot of things being stretched to the breaking point. So really the markets, I think in equities, bonds, obviously, and gold are looking forward and kind of feeling forward and trying to price in whatever that is and whenever it comes. But whether it's going to come, I don't think smart investors out there have any doubt that it will.
Yeah, it's clear as you've laid out, there's all these different elements that are stacking up on one side against the Fed there. And yet we have Powell still saying, a soft landing is in reach. We still could maybe have that happen. I wonder if you can talk a little bit about that. Is there any scenario where we can have that, where we somehow make it through and they pull that off?
Yeah, I think it's possible. Anything is possible. I've been in these markets long enough to realize that they could do it, but it would really be threading a needle and really contrary to everything we know. The Fed typically overreacts when there's one impetus. I mean, they thought that inflation was transitory till it really got entrenched and began to spike, and then they had to react very harshly. That is due to their overreaction post-COVID. They did everything they did in the great financial crisis of 2008, but they did it to a multiple and much more quickly. And that led to, of course, inflationary spikes. And now they are overcompensating in the other direction. and they're going to create another crisis, which they're going to have to respond to in a way that is much greater than what they did post-COVID. So this is what they do. This is what happens. And what we're seeing now is that the markets are starting to factor this in into their planning. And that's why stocks and bonds and the metals and commodities are really looking forward and trying to figure out when that next event will happen and preparing for it. That's why gold is down about 10%, even though real interest rates have soared over the last year. So gold has refused to fall to where it really should have in this kind of a tightening environment. And that's because smart people don't want to be short gold for sure, but they want to own it in this kind of a circumstance.
I think that helps to explain a lot of what's going on there. And another thing, I was watching one of your recent interviews elsewhere, and you said something that kind of helped me understand what's going on with gold. And I wondered if we could talk about it a little bit here. Essentially, you had said the market doesn't pay attention to where the price of gold, for example, is right now. It's looking at where it's going. So I wondered if you could go into that a little bit more, because that helped me kind of contextualize what's going on.
Yeah, all investment markets are predictive mechanisms. They're trying to price in the future. And in particular, in the junior mining share market that we're so engrossed in, it is a momentum market. It moves very quickly. It'll give you whiplash when it goes from dead in the water as it is now to racing ahead. So you need to be prepared for those kinds of things. But no, investors don't really care. The markets don't really care what the level of prices are. I mean, you look at gold right now, and a lot of mining companies can be very profitable, but that's not reflected in their share price. The markets care about where the price is going. And right now it's stuck in the water. It is not going up. It's going down a little bit. As I said, it could have gone and probably should have gone down much more. So markets and investors are kind of looking that something nebulous is in the future. And they don't want to get rid of their gold, but nobody's jumping into the market and buying yet, because the market has not established an uptrend. Now, in this situation, I think because metals prices are already high, again, we won't need much of an uptrend before investors start to jump on board. It really depends on what was the reason for the uptrend. What is the reason for the uptrend? If it is a monetary issue, if it is that it seems like the Fed will imminently change its policy and start loosening again, or it has done so, then all bets are off, and this market will take off like a banshee to the upside. But yeah, they don't care where the price is. It's just where it's going.
And, in terms of getting positioned, I think when we spoke back in March, you kind of said in terms of the mining stocks, you had your position set. You were basically all set with what you wanted. I wondered if you are still feeling that way. Have you made adjustments over the last 6 months or so? How is it looking for you?
Yeah, not a lot of adjustments, because to adjust my portfolio, which is fully allocated right now, I'd have to create more liquidity by selling something. And that's kind of the trick box you get into in this very illiquid, generally illiquid junior mining share market, and extremely illiquid at market bottoms like we're at right now. The old adage, you're going to sell, but to who? You need somebody on the other side of that trade, and if there's no buying, there's nothing going to happen. That's why some junior mining companies will release news and good news, and their share price will go down because there's trading volume and it's an opening for some people to get out. So I have not made that much or any of an alteration in my allocations right now. And it's frustrating because there are so many bargains in this market right now. Companies with proven assets, proven value, real value that offers, 4 to 5 bagger potential from these levels if the market just normalizes. We're not talking about anything that's, a hair on fire metals and mining market. If it just gets to normal valuation levels, these companies will be trading 4 to 5 times their current market value. So with that kind of an opportunity, it's really a buyer's market, and you can almost take a shotgun approach. But I advise people to really take a more selective approach. Find those companies that have real assets and great management teams, and just accumulate them. I've done all my accumulation personally, and I'm waiting for the market to start rewarding me. And it has been frustrating, but I think the change is coming. The turn upward is coming.
All right. So as we've been talking about gold, we can see that that's the sector where our move is coming, but into the future. I know you're also bullish on copper, but again, that's probably an even more long-term story. So just as we finish up, I wondered if there's any kind of happening right now sectors that you would tell investors to take a look at.
Yeah, uranium has come a long way. The junior companies involved in the uranium market have moved quite a bit, but there's a lot behind that move. And what we've seen are really two primary factors. I mean, the demand story is the same, but from a supply standpoint, we've seen the emergence of the Sprott Physical Uranium Trust and its buying on the market. But also we've seen the removal of Russia from the market, and not just as much in supplies, but also in processing. And that's created some bottlenecks in the market as well. And the utilities now are becoming a bit more motivated. I don't think it's a sense of urgency or panic yet from the utilities to start restocking and entering into contracts for supplies, but they're more active right now, and I think that is going to grow as these supply pressures increase over the coming months, and they will get increasingly more enthusiastic about buying in both the spot market and in contract levels. And the supplies to meet that demand just aren't there. So they will have to be rectified. The market will have to be balanced by significantly higher prices that will incentivize some of these projects to actually get into production. So I think that's a market that's particularly exciting right now, and still exciting.
Okay, I'm going to leave it there for now because I'm sure we're going to talk again in about a month, less than a month at the conference. But I'll put it back to you and just let us know if there are any more details we should know about the event, where we can find more information.
Yeah, you can go to neworleansconference.com. You may have a special link as well where people can get the lowest possible price to attend. If they register now, they can save up to $400 from the registration fee. Really, just as important, our room block at the host hotel, the Hilton, sitting right next to the river in New Orleans. Great location. That room block is about to close, so I urge anyone coming to reserve their rooms through our room block immediately and get it while you can, because it's extremely helpful and convenient to be in the host hotel. And I think it's very important that you attend this event. Any serious investor, to my mind, can't afford not to be there. And if you look at our speaker roster, if you go to our website, neworleansconference.com, look at our speaker roster and Google some of the names you may not be familiar with, you'll see why I'm so excited to have them there. It really is everything coming together, an incredible speaker roster and a crucial time in the markets. And I hope to see you there in New Orleans.
Certainly, I'm looking forward to it. As I said, it'll be a great event, and I'll leave the details in the video description for people who would like to learn more and hopefully register. So thank you very much for coming to tell us about it and what's going on in the markets right now. This is really great.
Thank you, Charlotte. Great to talk with you as always.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Brien Lundin with Gold Newsletter. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.